Good morning, everybody, and welcome to the Siler Wealth Management video blog. And this morning is Tuesday, March 22nd. Thanks for joining us. And it's going to be a little bit muted today. Of course, you wake up this morning, you see there's a terrorist act in Belgium, Brussels, Belgium, and so far 26 confirmed dead. Look, here's the problem, and you see what goes on. The markets are indicating lower, but the markets are really indicating, I think, a very muted downside. It's not as bad as you think. Certainly, after Paris, we had a big drop, and San Bernardino, we had a bigger drop. So markets come back from this type of action. It happens. I mean, obviously, the 9/11, which is the biggest terrorist act in the history of the world, was so devastating to the markets, but eventually they did come back. But here's the question: is how do you protect your portfolio against something like this? Well, you have to be in assets, and part of your assets in your portfolio that are not correlated to the stock market. In other words, you have to have investments in your portfolio that don't care what the market does. So if something like this happens closer to home, of course, this is a terrible, terrible thing, and because you have these psychopaths out there that want to be with 72 virgins or whatever the case may be, they do these things and with no regard to human life or no regard to anything. So we can't control that. What we can control is not having every dollar we own in the stock market. You never want to do that. So we use part of our methods. We use an endowment method. I mean, the biggest endowments in the world, Yale, Harvard, Princeton, Stanford, those are investment portfolios. They have to be. And they're some of the smartest minds in the world. And up to 40, 50%, I saw numbers that over 50% of their portfolio is what you call alternative assets or non-correlated assets. Again, things that don't care what the stock market does. Look, terrorist attempts, you're going to have certain stocks move up. Hey, oil may move up because of the fear. Gold may move up, more of the commodity type action. You may have bomb detection companies start to move up. There are ways to see markets move, but in general, things like this scare the markets, and markets do not like uncertainty. We don't know that later on today something else happens in Europe. We don't know that. But you're always going to live with that fear now. We live in a whole different age than we did 30 years ago. It's totally different. So my advice, and this is what we talk to all of our clients, is you can't have everything correlated to the stock market. Even bonds, they're not correlated to the stock market, but they're correlated to the bond market. So things can happen there too. I'm talking assets like a real estate or private equity or some commodities, okay? Those will work. Absolute value type investments. And I can go on and explain what they are, but we're talking about, last week I talked about apartment complexes. Okay, apartment complexes don't care that the market goes down 1,000 points. Just don't care. Fact of the matter is, apartment complexes are bursting at the seams, and they're going to pay people a nice income just to hold it. So that's kind of stuff we're looking at. And I didn't mean, this is not what my plan was to talk about that, but it was forefront in the news. I thought we'd address it, but the markets are indicating a slightly lower opening. So right now, that just shows you the market's pretty strong. If this happened back in January, February, when the market was weak, we'd be down 200 and 300 points right out of the gate. We don't see that now. Okay. Now, tax time is coming up. Okay, I wanted to give a few tidbits about tax time. Now, this year, it is April 18th. It's Monday, April 18th. So you have till the 18th to do your taxes and or file an extension. So a couple things to prepare. First of all, you can open an IRA and contribute to that IRA right there, really technically, by April 18th. However, this is what we do. We specialize in IRAs and retirement accounts. If you come to my office on April 18th, I can't guarantee that it's going to get in there under the wire. So you come to my office, you want to get started in an IRA or transfer an existing, a lot of folks have existing IRAs that are just not performing. If you want to move that to us and then add to your IRA, we ask that you do it a few days before the deadline. Okay, let's not just start sweating and then, trying to get that thing under the wire. So that being said, a couple of things I want you to look at as far as, these are just some facts that are overlooked sometimes that could help you with some deductions. First of all, these are really relevant to taxable accounts, not IRAs or 401ks, because any growth in those are tax deferred, so you don't have to worry about the taxes. But mutual funds can sometimes be really, and can contribute to your tax burden with some capital gains and something you can't control either, capital gains and dividends. So one thing you can do, if you reinvest your capital gains and dividends into your mutual funds, just dividend reinvest, it will raise the cost basis of your fund. So your costs will be higher. So when you do liquidate those funds, your burden is a little bit less. So if you get the capital gains and taxes, you're paying tax on the capital gains and taxes, then your fund price is going to stay down. And if it goes up, you make that spread there, you're going to get hit with capital gains. So that's one thing. Let's talk about charitable donations. Hey, you know what? I know a lot of us out there, we do give. You can give up to $250 without any receipts. If you do over $250, you got to get some receipts. So when the Salvation Army or they come pick up your stuff, just try and get receipts and you can fill that out, okay? And really there are websites out there that tell you, hey, I gave this article of clothing, this shirt, that's worth $10 as a write-off. There are apps out there, and I'll try and find them, but I've seen them before. Now, if you are doing something for a charity, you're working, helping, volunteer, you can write up to 14 cents a mile as well. So that is legit. Moving expenses, and this is something that I know my son went through. Moving expenses for your very first job, you can deduct your moving expenses, and you can also deduct 23 cents a mile. That's something, I don't think he knew that when he did his taxes, but I'm going to have to see. I think he already did them. So that is really interesting. I didn't know that, and that's kind of I don't know if that's a new rule, but that's something that if you are your first job, that's fantastic. Of course, we all know that if you refinance your mortgage, refi points. Okay, check that. Get your statement and use that. That is a tax write-off. And here's one thing that's really important, and we just did a Women in Investing workshop last week, and childcare. There is a childcare tax credit that you can earn up to 20 to 35% of your cost for childcare. That is a credit. That's not just a write-off. So let's say you spend $5,000 a year, which I know it's more than that. I have no idea how much it costs these days, but I know it's expensive. So you spend $5,000 a year in childcare. You could be eligible for $1,000 to $2,000 in a credit that's right into your tax, right into your pocket. Okay, it does not qualify if you have those childcare reimbursements through work. This is strictly hey, I pay my nanny or I pay my childcare facility this amount. So talk to your accountant about it. All right, I'm not a CPA, but talk to your accountant. I know about taxes, but I would rather you to make sure you qualify because there are some income restrictions on all of these write-offs. And again, you can write off $5,500 in your IRA. If you're 50 and over, you can do $6,500, get that $1,000 catch-up for us old people. So very simple. All you have to do, you call, make an appointment, and come in. We'll do paperwork. You make your contribution, and then we can talk about how much risk you want to take and what funds and what things you can invest your IRA money. Remember, it is tax time, and we only have a few weeks left. So please, if you have any questions on any of these, and I'll give some more tax tips as we go further. And let's think about the folks in Brussels, Belgium. That's just we just went through this in our country. It's horrible. I can't stand it. It really puts me in a bad mood. But let's try and have a better day today. You guys are awesome. Thank you for sharing our video. Share the video, like the video. We're going to draw some names here for the cruise. The first name I'm going to draw is Stacy S. Stacy S. I know Stacy S. Known her since she was a little girl. Sweet. Okay, the next winner for a cruise for two to the Bahamas. Okay, all you have to pay is a port tax. Everything else is free, and it's for two. It leaves out of Palm Beach. The next winner is Julie E. Julie E., you are a winner of a cruise for two to the Bahamas. Thanks for sharing the video. If you share the video, you get 2 entries. If you like our video or the Facebook site, you get 1 entry. Thank you for joining. Maybe I'll draw another one on Thursday. Okay, you guys have a fantastic day. I'm Lee Seiler, the Stock Doctor, Seiler Wealth Management. Thanks for joining me.